They told us Florida's real estate market was untouchable. But the numbers now tell a very different story. Across the Sunshine State, once booming cities are hitting the brakes. Prices are falling, homes are sitting, and in some areas, buyers have vanished entirely. In this video, we're breaking down the top 10 cities in Florida where the housing market is correcting fast in 2025. We're talking steep price cuts, skyrocketing inventory, and once hot neighborhoods now flooded with listings. From hurricane-hit coastlines to overbuilt condo markets, we'll reveal where the downturn is hitting hardest and why smart buyers are waiting, not rushing. So if you're thinking of buying a home in Florida, or if you're worried your investment might already be in trouble, you need to see what's really happening on the ground. Let's dive in. But before we begin, smash that like button, subscribe to the Globe Realty, and drop a comment below if there are already signs of housing correction in your neighborhood. Number 10. Port St Lucie. Not long ago, Port St Lucie was the poster child for Florida's post-pandemic housing boom, a magnet for retirees, remote workers, and families. But now, the winds are shifting. Condo prices are down approximately 7.3% year-over-year as of spring 2025, a stark reversal from last year's frenzy. Meanwhile, single-family home values have dipped 3 to 4% on average, with Zillow estimating around 3.4% in the last 12 months. Inventory? Swelling. Rocket reports 2,330 homes for sale in May, up 4.5% from April, and Redfin notes homes now sit 87 days on market, a 17-day jump year-over-year. Over half of homes are selling below asking, 59% under list price, giving buyers serious leverage. So what's triggering this slowdown? Mortgage rates hovering near 6 to 7% are cutting into buyer budgets. And no, that's not forecasted to change much. Add rising insurance premiums. Florida sees some of the highest increases in the nation due to climate risks and construction costs, and suddenly owning a condo doesn't feel as cheap. Let me ask you, have insurance hikes made you rethink Florida's appeal? And what about mortgage pain? Is Port St Lucie starting to feel like a bubble burst? One forecasting firm even warns of sharp declines over the next 12 months, tied to mortgage clause term risks, but others argue population inflows may cushion the fall. In short, Port St Lucie's shift marks a broader trend, pandemic-fueled shelters giving way to a more balanced, buyer-friendly market. It's a pivotal moment, and you'll want to watch what happens next. Number 9. Panama City. Once hailed as a post-hurricane comeback story, Panama City rode a wave of reconstruction, real estate optimism, and investor frenzy. But in 2025, the music has quieted, and fast. Condo prices are down approximately 8.4% year-over-year, and single-family homes have dipped approximately 1.4%, marking one of the steepest regional corrections on Florida's Gulf Coast. Why? The market that once rebounded quickly after Hurricane Michael in 2018 is now facing oversaturation and cooling demand. According to Redfin and local MLS data, homes in Panama City are lingering longer on the market, averaging 92-plus days, and nearly 62% of listings are experiencing price cuts. Active inventory has grown 19% year-over-year, placing more power in the hands of buyers than at any time in the past 3 years. The real pain point? Mortgage sensitivity. With 30-year fixed rates hovering between 6.75% and 7.1%, even modestly priced homes now push monthly payments beyond comfort zones for many local buyers. Add rising flood insurance premiums, which increased by over 35% in some Bay County zones this year, and the affordability picture darkens further. So here's the real question. Is Panama City still a hidden gem for bargain hunters, or a trap for investors banking on short-term appreciation? While migration into the Florida Panhandle hasn't stopped entirely, analysts warn that unless borrowing costs ease, the market may see further price adjustments into early 2026. Panama City is no crash zone yet, but the correction is undeniable. What was once a buy now or regret later city is now flashing buyer caution signals all over the map. Stay tuned, because if this trend deepens, the ripple effects could reach well beyond the Gulf. Number 8. Sebastian. Nestled along Florida's Treasure Coast, Sebastian has long been a haven for retirees and seasonal homeowners. Quiet, scenic, and often overlooked until now. Because in 2025, this sleepy market is making noise for the wrong reasons. Condo prices in Sebastian have dropped by approximately 7.7% year over year, while single-family homes are down approximately 1.5%, according to regional MLS data. It's not a dramatic crash, but it's a steady and undeniable correction, one that's catching long-time owners and late investors off guard. Inventory? Rising like the tide. Listings are up 22% year over year, with more than half of all properties undergoing price cuts, many of them condos that once sold within days. Homes that used to fly off the market are now sitting for 80 to 90 days, sometimes longer if priced aggressively. And while Sebastian avoided the intense building frenzy of bigger metros, it's still feeling the ripple effects of broader market forces. 1. Mortgage rates sitting above 6.8% have drained purchasing power. 2. Home insurance premiums, especially for older coastal properties, have risen 25 to 30% in the past 12 months. 3. Stricter HOA reserve laws post-Surfside are making condo ownership less attractive. So let's ask, is Sebastian still the serene safe haven it was 5 years ago, or is it now too expensive to justify the peace and quiet? While population trickles in from northern states, it's not fast enough to soak up the swelling inventory. Experts forecast a continued mild correction through early 2026, especially in the condo segment. Sebastian isn't collapsing, it's gently deflating, but for buyers looking for leverage and sellers wondering if they missed the peak, this city just might be the bellwether. Number 7. Deltona. At the height of the COVID housing frenzy, Deltona was one of Florida's hottest small cities. Just a short drive from Orlando, it offered space, affordability, and a suburban dream for priced-out buyers. But in 2025, that dream is coming down to earth. Condo prices in Deltona are down approximately 6.6% year over year, while single-family homes have slipped by approximately 1.3%. It's not the deepest drop in Florida, but it's a sharp pivot from the double-digit gains seen just 2 years ago. The big reveal? Inventory is climbing, and fast. Local listings have jumped 21% since late 2024, while price cuts are becoming the norm. Over 58% of homes sold in second quarter of 2025 went for below asking. Homes are taking longer to move, with average days on market stretching past 75 days, compared to just 49 this time last year. But the deeper story is about pressure points. 1. Mortgage affordability has eroded. Deltona's average buyer is now grappling with monthly payments $400 to $600 higher than in 2022 due to 6.9% plus interest rates. 2. Insurance premiums in Volusia County have climbed significantly, particularly for homes built before 2000. Many owners are reporting premium increases of 30 to 40%. 3. And with the city's rapid pandemic-era growth slowing, inbound migration is softening, which removes the cushion that once propped up rising prices. So here's a question. Is Deltona still a smart suburban buy, or has the post-pandemic glow worn off? Forecasts suggest a continued mild to moderate correction through mid-2026, especially in neighborhoods that saw the fastest appreciation. Deltona's not in trouble, but it's no longer untouchable. Number 6. Northport. For a while, Northport was the rising star of Florida real estate. With its clean streets, new subdivisions, and relatively affordable homes, it became a magnet for buyers fleeing the high costs of Sarasota and Miami. But now, the shine is wearing off. In 2025, condo prices are down approximately 8.9%, and single-family home prices have declined approximately 5% year over year. Some housing analysts are forecasting an additional approximately 6.3% drop before the year ends, making Northport one of the sharpest correcting markets in the state. The local market is showing clear symptoms of fatigue. 1. Active listings are up 24% year over year. 2. Over 60% of homes are selling below list price. 3. The average home is now sitting on the market for 90-plus days, nearly double the time it took in early 2023. And the affordability that once attracted out-of-state buyers? It's slipping away fast. Buyers today face mortgage payments hundreds higher than even last year, thanks to rates hovering around 6.75 to 7%. Meanwhile, insurance premiums, especially in flood-prone areas, have soared 30 to 40%, causing some deals to fall apart at closing. Add in rising HOA fees, increased competition from new builds, and an aging population hesitant to downsize, and Northport finds itself in a mid-tier correction cycle that's hitting harder than expected. So here's the kicker. Is this a buying opportunity or the start of a deeper downturn? Forecast models suggest Northport may not bottom out until early 2026, particularly in oversupplied subdivisions. For now, the market is correcting, and smart buyers are watching closely. If you're finding this breakdown helpful, make sure to hit the like button, subscribe to the Globe Realty, and drop a comment below. Which Florida city do you think is correcting the fastest, and why? Alright, let's now see the top 5. Number 5. Naples. Naples has always carried a certain mystique. Gated golf communities, oceanfront penthouses, and retirees with deep pockets defined this Gulf Coast gem. But in 2025, even luxury isn't immune to the market's tightening grip. Condo prices in Naples are down 7.2% year-over-year, while single-family homes have dipped 2.7%, according to MLS data and Redfin Analytics. It's one of the most pronounced corrections in Florida's high-end markets. Quiet, but significant. Why? Because even wealthy buyers are watching the numbers. Inventory has risen by nearly 19% since last fall, and more than 55% of listings in Q2 of 2025 had at least one price cut. Homes that once moved within days are now averaging 93 days on market, nearly double what we saw during the peak. Mortgage rates may not crush luxury buyers, but 7% jumbo loans still sting. And don't forget, insurance premiums on luxury homes, especially those near the coast, have skyrocketed. In Collier County, annual premiums have surged over 35% in the past 12 months, driven by flood risk reassessments and increased rebuild costs. Then there's demand. International buyers are thinning out, and with new tax regulations and global uncertainty, fewer foreign investors are buying up Naples real estate. So, here's something to chew on. Is Naples just adjusting, or are we seeing the beginning of a long overdue price recalibration in Florida's most glamorous zip codes? Forecasts say Naples may continue its slow correction through late 2025, especially for overvalued condos. The elite are still buying, but they're negotiating harder than ever. Number 4. Cape Coral. Once ground zero for Florida's post-COVID home-buying frenzy, Cape Coral is now seeing that surge unravel fast. This once red-hot Gulf Coast city is cooling quicker than many expected, and the numbers speak volumes. As of May 2025, home prices in Cape Coral are down approximately 7.0% year-over-year. Median sale price? Around $364,000, down from nearly $400,000 last spring. Days on market? 76 and rising, up 17 days from this time last year. And here's the kicker. Inventory has exploded, up 37.7% year-over-year, flooding the market with options. More supply, fewer qualified buyers, and rising pressure on sellers, a textbook correction. So what's behind the shift? 1. Hurricane Ian's aftermath created a temporary construction and relocation surge, but now oversupply is catching up. 2. Mortgage rates hovering near 7% are freezing out many middle-income buyers who once stretched to buy here. 3. Insurance premiums in the area have become downright painful. Some homeowners report annual premiums exceeding $6,000, depending on flood zones and property age. And investors? They're pulling back hard. Flippers who bought at the 2022 peak are struggling to exit profitably, and short-term rental saturation is leading to falling occupancy rates. So here's the question. Did Cape Coral peak too fast for its own good? Forecasts suggest the city could face continued price pressure into early 2026, especially in overbuilt neighborhoods and the vulnerable condo segment. For now, it's a buyer's market and a cautionary tale for fast-growth metros across the state. Number 3. Punta Gorda. Tucked between Sarasota and Fort Meyers, Punta Gorda used to be one of Southwest Florida's best-kept secrets. But today, it's gaining headlines for an entirely different reason, leading the state in price declines and inventory spikes. As of May 2025, median home prices are down 7.7% year-over-year, settling around $433,000. But Zillow data reveals a deeper truth. Home values are down 10.8% year-over-year, making Punta Gorda one of Florida's most corrected cities this year. And it's not just prices. The inventory is up over 140% compared to long-term averages, creating a sea of listings. Redfin reports that nearly 70% of homes are now selling below asking price, and the average home spends 89 days on market, even longer for condos. What's fueling the slide? 1. Hurricane Ian's long shadow. While rebuilding spiked demand in 2023, it also led to oversupply in 2024 to 2025. 2. Skyrocketing insurance premiums, particularly for waterfront and older homes. Some owners report annual increases of 40 to 60%, forcing many to list or walk away. 3. And mortgage rate sensitivity is very real here. A modest 1% rate hike in this market translates to tens of thousands in lifetime cost, especially for retirees on fixed incomes. So here's the real question. Is Punta Gorda still a dream for Florida-bound retirees, or is it becoming a cautionary tale? Most forecasts predict continued softening through late 2025, particularly in flood-prone zones and higher-end properties that outpaced income growth during the boom. It's official. This charming coastal city is in correction mode, but whether it's a temporary dip or the start of a long-term reset, that depends on what happens next with rates, storms, and sentiment. Number 2. Cape Coral, Fort Myers Metro. If there's one Florida metro that perfectly captures the boom and bust cycle of the last 5 years, it's Cape Coral, Fort Myers. These sister cities were catapulted into the national spotlight during the pandemic migration wave. But now, they're at the center of a sharp and sobering correction. In 2025, home values across the metro are down 7.8% year-over-year, one of the steepest drops in any Florida region. Builders overbuilt, investors overbought, and now, listings are piling up. According to Realtor.com, the expected listing rate is a staggering 2.97%, one of the highest in the country. Translation: more homes are hitting the market than buyers can absorb. The result? Price reductions everywhere, especially in new construction neighborhoods. Several key forces are driving this correction. 1. Post-Hurricane Ian construction flooded the region with inventory during 2023 to 2024. 2. Short-term rental saturation has led to declining profits and investor pullback. 3. Insurance premiums have skyrocketed. Some homeowners now face $5,000 to $8,000 annual rates, making ownership unsustainable. 4. And with mortgage rates in the 6.9 to 7.2% range, affordability is at its tightest in a decade. Redfin reports that 63% of homes are now selling below asking, and average days on market have crossed 80+, with higher-end listings sitting even longer. So, here's the burning question. Is this correction a healthy reset or a sign of deeper cracks forming beneath the surface? Market analysts say Cape Coral Fort Myers may still have room to fall, particularly in oversupplied neighborhoods, but signs of stabilization could emerge by mid-2026 if rates and insurance level off. For now, this metro is the definition of buyer's market territory, and a watchlist item for anyone tracking Florida's future. Number 1. Punta Gorda. Again, yes, we've already seen Punta Gorda on this list, but when a city leads the state in both price decline and inventory surge, it deserves the top spot. As of mid-2025, Punta Gorda is Florida's most aggressively correcting market. According to Zillow, home values have dropped 10.8% year-over-year, and MLS data shows median sale prices are down 7.7%, landing around $433,000. But that's just the surface. Inventory is off the charts, up 114% compared to historical norms, with thousands of homes sitting untouched for months. Redfin confirms that nearly 70% of listings are closing below asking, and price cuts are now the norm, not the exception. So, what pushed this Gulf Coast gem to the edge? 1. Post-Hurricane Ian overbuilding led to a flood of supply, but demand hasn't kept up. 2. Flood insurance premiums have skyrocketed, up to $7,000 annually in some waterfront zones. 3. Mortgage rates in the 7% range are choking out would-be buyers, especially retirees relying on fixed incomes. 4. And many sellers, stuck, either underwater on mortgages or unwilling to lower prices to market reality. Punta Gorda, once marketed as a peaceful retirement oasis, is now a cautionary tale for overbuilt, climate-vulnerable housing markets. Even local agents are sounding the alarm, with some calling it the toughest selling environment in over a decade. And forecasts? Bleak. Many analysts expect continued price softening through early 2026, especially in high-risk zip codes and condo communities facing new structural inspection mandates. So ask yourself, Is this the bottom or just the beginning? Either way, Punta Gorda's correction isn't just a local issue, it's a warning shot for what could unfold in other parts of Florida next. There you have it, the top 10 Florida cities where the housing market is correcting fast in 2025. From once booming metros like Cape Coral and Northport to luxury enclaves like Naples and retiree havens like Punta Gorda, the signs are clear. Florida's housing market is no longer bulletproof. Rising insurance premiums, surging inventory, and mortgage rates north of 6.9% are squeezing both buyers and sellers. What was once a red-hot seller's paradise has cooled into a cautious buyer's battleground. But here's the thing. Corrections aren't crashes, they're moments of truth. And for savvy buyers, they offer leverage. For sellers, a reality check. And for investors, a test of patience and precision. So let's bring it to you. Are you seeing signs of a correction in your Florida city? Is this your moment to wait, buy, or sell? Let us know in the comments. We're watching the market right alongside you. And if this video gave you insight you didn't get from the headlines, make sure to like, subscribe, and turn on notifications so you never miss a breakdown from the Globe Realty. Florida is shifting fast, and we'll be right here, keeping you ahead of the curve.